Hello and welcome to another update on SUI. The SUI chart is still in a correction. Yesterday we were looking at this rally from the 4th of May low, from the Sunday low, and I told you that, well, it looks interesting, but it's only a three-wave move up so far, and there's absolutely no evidence that we get a more decisive move to the upside, especially given that Bitcoin is still kind of weak in the short term. So the local trend remains down with only a three-wave move up and a sequence of lower lows and lower highs. The immediate trend still is downward, but we still have a lot of room in this Fibonacci support area that we are tracking. So this move to the downside is seen as a wave 4 correction, and it's seen as a more complex WXY pattern now. Before, I considered it as a so-called A, B, C structure. That would have been enough already, but that's exactly why WXY structures exist, because if, for example, the move to the downside when a three-wave move down is completed was not substantial enough to correct the entire rally that happened before, or if the entire market is not ready to turn around and the chart remains in a vortex to the downside here, that is when corrections can extend. And how can we, or what would be our, let's say, signal, or how do we know that this is a risk? Well, with only a three-wave move up, okay, with only a three-wave move up, you cannot trust any trend reversal. Would have been different had SUI formed 5 waves up. 1, 2, 3, 4, 5. Clearly didn't happen. So only a three-wave move up that keeps the overall correction intact, and it's now morphing into a WXY pattern. That is okay. That is absolutely okay. I have to say, though, that ideally now in this move down, we're going to wrap it all up. We're going to complete that correction, and the market will form another fifth wave. Not another fifth wave, but will actually form a fifth wave from here. That would be wave 5 of 1. What we need is a reaction to this Fibonacci support zone at some point. So, I mean, it seems likely at this stage that we are going to test the $3.2 level. Let's call it the $3 mark, because first of all, this is the, hold on, let me just remove that. This is the 38.2 retracement. That seems like a very, that's always a very common target for a fourth wave anyway. Doesn't mean we have to get there, but especially with that lower low that might be unfolding, that seems like a reasonable scenario. That doesn't need to happen in a direct fashion, okay? But for example, what could happen is that this B wave simply extends. But we can say it's very simple. As long as the market stays below the X wave high, the overall pressure seems downward, until we get that new low formed and then an impulsive reaction. What could happen, there are 2 pathways I see from here. The first pathway is the direct move to the downside, in which we're moving down direct, as I said, directly 1, 2, 3, 4, 5, like that, and could complete it in a direct fashion. Now, sometimes, we all know how the markets work. The markets don't make it that easy, and we don't get that clear lower low more directly. So what can happen, especially from a location like that, where we're testing the previous low, and some buyers might step in, the market might form a wider B wave. So that would be, you could call it an alternative pathway. We just need to be mindful that this is an option. And it's just forming a wider A, B, C structure. And the internal structure is an A, B, C. So that wouldn't really change anything. It would just mean that we are moving in this range for a little longer. And that also shows us why a break simply above the last swing high at $3.50 isn't really confirmation we're going higher, because it could simply be a more extended B wave. But that is why this high is relevant, because if we're dealing with a WXY structure, that B wave in wave Y shouldn't really break above the X wave high. So, and that is where we talk about 378. So the $3.78 level, that is a level that needs to be broken to suggest the correction is finished. If it happens from here, that rally, I would see it as a B wave. If it happens from a lower low and we maybe reach $3.02, then see a nice reaction, yeah, that is probably then, that is then probably the next move to the upside that could take us higher in a fifth wave. So this is how I understand the chart right now. That being said, the $2.79 level really needs to hold to keep the overall pattern here, potential upside pattern, alive. Yeah, that's the update on SUI. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.